4 years, wow, all right. It's pretty cool. All right, so the difference for those of you who are new on YouTube channel, we are heavily invested in AI. My background is technology, building software, neural networks, AI, and we use these signals to trade in live trading room. We have Keith. We have Keith. He's a professional market maker. Spend a lot of time in the exchange, understands options intimately. And then my background is technology, managing my own money. I've also been doing that for over 25 years. And then we're trading them in the live trading room environment, and this is where you guys are at. Disclosures are important, please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. You can always pause the screen if you need more time to read the disclosures. If this is your first broadcast, I encourage you to click on optionscreening.com so you can understand the very important. All right, let's look at, we have Super Bowl, right? We have Super Bowl of earnings season and just news in general, right? We have Fed view for now, right? It's very unclear in terms of if there's any changes in the Fed decision-making process in terms of, lowering interest rates, hiking interest rates. I think the consensus is 2 rate cuts this year. It's still not off the table. Probably not first 6 months of the year, right? The expectation is probably sometime in Q3 we're gonna get those 3 and 4, get those 2 rate cuts, and we're in wait and see mode, right? Wait and see mode. New administration, there's new executive orders every day that could potentially influence the tariffs, and inflation and employment, right? A lot of areas. So at least based on the interest rates as of now, I don't see any, reaction. So now, once people digest those news, and it's, I think, press conference is over, right? Once people digest these news, then we have probably what people are more important is the earnings, right? We have Microsoft after the earnings. I think I misspoke. We also have Meta earnings, right? Breaking out at all-time highs, and Tesla, right? And this is kind of probably more important than the interest rate decision because of this AI digestion, right? We talked about this before DeepSeek, end of last year, beginning of this year. I've been saying that one of the risks is that evaluations, right? The evaluations are high, and that there could be some AI digestion that maybe we don't need as many, NVIDIA chips, right, as we needed before, if the algorithms for the training and the learning on the AI models, which is very close to my heart because Tradespoon and Yellow Tunnel, this is all AI, right? When you look at these models on Yellow Tunnel or Tradespoon, these are AI models, right? You can see them on Yellow Tunnel and you can see them on Tradespoon, right? It learns on the data and makes inferences, right? Spiders is oversold, we see it in uptrend, right? So it makes decision just like humans, right? It looks at the data, learns on the data, and makes an inference, right? So that inference engine, right, gets more and more efficient, right? We talked about chess game, right? When Garry Kasparov, right, played, and we went through this versus, what is it, Deep Blue, DeepSeek. How interesting is this? Right, when they come out with the first version, and I think Kasparov actually won. This was an AI back in '97. Is that it took billion permutations, for Deep Blue, IBM to come up with all the infinite permutations. Then, possible in the game of chess. But then it got better and faster, right? It was able to have less and less iterations and less, because it was learning, right? And it didn't have to go through all the permutations. you already know that, okay, in certain situation, this is the best opening, right? Queen's Gambit. And you really don't need to look at other permutations. And the algorithm, the way what's the new version? I forget, Alpha Seek, best models. Stockfish, okay. John Black. So Stockfish, right? So in Stockfish now is this AI, right? What is it? 20 years later, that can do it. Half the iterations, half the cost. You need less energy. You need less semiconductors, and the models are better, right? And interestingly enough, instead of Deep Blue, it's Deep Seek now. Okay. So, but how does it affect earnings? I mean, it's all great and wonderful, but we don't have time to wait for 10 years. But it probably does tell you that just like chess game, multi-language models also going to get better and faster. That's a fact of life. And NVIDIA might not be as needed anymore, right? Maybe this 30% pullback is justified, right? But you don't know until you have earnings, right? So that's kind of the question on everybody's mind, right? And same goes for Microsoft, right? Right, it's been underperforming, though it did rebound back because they need to spend less on data center and infrastructure, right? This is probably one of the reasons Meta is up, because initially everybody sold off because they thought AI is done, but now they're kind of realizing, well, no, it's just going to get better and better, right? Just like this, Stockfish algorithm, right? But it was deep blue, and now it's Stockfish, right? So it could be in Meta, and now it's going to be Palantir or something along those lines, right? So we know the progress is going to be made, but the question is who's going to be a winner, right? And a lot of it depends on earnings, right? A lot of it depends what the companies will say. So that's after hours, right? After hours we have Microsoft, Meta, and Tesla. So market is going to move because people are kind of concerned. Interest rates right now not really going anywhere, but down, right back to 50-day moving average. That's positive for the market. Dollar is broke at 50-day moving average. Nice pullback again, also positive for the market. High yield, there's no dislocations. High yield is stable, right? It's close to multi-year highs. So I think that's all positive. Value stocks are above 50-day moving average. QQQ got above 50-day moving average. That's good. Spiders are above 50-day moving average. Small caps close to 50-day moving average. So I think now the attention is back to the earnings, right? Back to the earnings, and so far earnings have been stable. Starbucks after the earnings is up 8%. F5 is up 10%. ASML is up. So we do have semiconductors start reporting earnings. ASML is up 5%. And F5 network gear infrastructure player, just relentlessly keep going higher and doing well. So F5 is an all-time high. Let's see. Yeah, nice. F5 has just been a great company. All right, any questions? Ted, Patrick, Bob. All right. So let's see. Let's look at some of the sectors, see what stands out. Materials, so far kind of sideways consolidation that interest rates will go down, right? One of the unknowns is Powell, fight between new administration and FOMC, right? Trump administration wants interest rates to be lowered, and Powell said he's not going to resign and not going to lower interest rates. So at least for now, home builders are pulling back the original reaction. VIX is at 16 off the highs, so not a lot of fear in the market. Industrials continue to pull back, but back to 50-day moving average. The REITs are down, same thing. People are maybe rotating from the safety asset classes. REITs healthcare. Pulling back, I think healthcare consolidation is still one of the better performing sectors. Energy, REITs. What else? Retail stocks are slightly down. Transportation slightly down, but above 50-day moving average. Semiconductors kind of consolidating, right? This is NVIDIA chart as well. So, but oversold and did break the level, right? So I think the line in the sand is around the 38 level. This is the October lows, September, October lows. And we're trading below that level, right? And there's not much support. So we need, better, we need to slow, get above 200-day moving average, above 50-day moving average, right? Because we broke this to the upside and now we're breaking it to the downside. XLK is down. Spiders pulling back. XLF is one of the better performing. Jets still strong. Airlines and Europe. Did I say Trump is not a fan of credit cards? No, I didn't say that. I think tariffs. There's uncertainty about Trump administration in terms of tariffs, right? And I think Trump and FOMC, right? Not credit cards, but FOMC, Powell, they don't see eye to eye, right? Trump wants, FOMC committee and Powell to lower interest rate aggressively, right? I mean, nothing has changed. He wanted the same in 2016 administration. And Powell basically said, I don't report to, Trump, so I'm going to keep we're going to wait and see. I think that's what I meant. Credit cards, I think, no, Trump, I didn't say that. At least it's not what I tried to say. What else is interesting? Apple, strong rebound in Apple going into the earnings. I think the earnings are Thursday. I think after the close, we're going to have Apple earnings. And again, NVIDIA is pulling back. NVIDIA is pulling back. Any questions? So if you do have NVIDIA in a lot of these stocks, you probably want to still hedge your positions, right? Still hedge your position. For now, it trades in the box, right? Between 115 and 130, pretty wide range. The good news is not making new lows for 3 days, right? But we are, we're going to have to digest a lot of earnings going forward. In terms of trading today, I think only PNC got triggered. Half of the position I closed on banks. Banks continue to kind of lead the market. One of the better performance sectors was yield curve normalization. So I did close half of PNC. Right, this is part of active trader. If you want to look at these signals, you do have them in active trader or on yellow tunnel. But we did have PNC yesterday, today. BlackRock Group, Cigna, DHR, right? So some of the healthcare stocks. There's a lot of signals in healthcare stocks and money management, right? And whether it's Morgan Stanley or JP Morgan, they're all trying to break out, right? They're all kind of reacting positively and continues to trade higher. Hood and RDT. So let's look at Bitcoin. So Bitcoin is up, right? Bitcoin is up, Robinhood is up. So it's above 100,000. So this is kind of a psychological level. As long as it's above 50-day moving average, it's a risk on, but still consolidation, right? We've been consolidating for quite some time. And RDT, Reddit. Okay, Reddit, social media. Yeah, strong momentum, consolidation, and then going higher. And earnings approaching. Very nice, Bob. Thank you for sharing. Yeah, BSX is relentlessly going high. This was actually one of our trade ideas, and BSX signals and just continues to grind higher. Very nice as well. All right, thank you for sharing that, Patrick, Bob, Alon, Jeff. All right. So I closed half of the PNC. I put in order to close General Electric at $4. General Electric, I mean, it's still away. It's a March position, so it's going to take time. But General Electric looks like found the support around this October highs, right? You know, short term, you know, that's obviously strong support, and bouncing back, maybe it has more room to the upside. So I put an order to close General Motors for, General Electric for $4. And I put an order to close Citigroup, right? Citigroup also rallied. Have a Citigroup spread that also kind of consolidating, but I think is going to continue going higher. General Motors still against me, right? So I sold the spread for 20 cents. It's trading at 45 cents. I mean, the good news is that 50 strike, it's pinged to the 50 strike. It's kind of just dancing around that strike. But the bad news, the clock is ticking, right? The clock is ticking. It's a 50-49 spread, so I know what my maximum loss is. And I hope that it's going to stay in that, it's going to gravitate and going to continue to be pinged to that strike, right? That was the original idea behind this trade. So if you look at the gamma exposure, right? Let's look at spiders. Gamma exposure. Let's look at monthly. Yeah, let's just do that. So 620, you know, if Microsoft Meta delivers strong earnings, we're at 620, right? And, you know, if they miss, then we're 580, 585, right? Those are the two extremes based on the earnings. Right now, 600 obviously is the balls, but 595, 590, they're all pretty much equally positioned. Here, same thing, 605, 610 is your next order. If it breaks 610, you know, it's probably going to jump to 620, right? That's the highest position. And how's total gamma? A little gamma, about 4 billion, hasn't been changing. Not a lot, but seems to be enough to support the current market. So that's orders and see if that relatively high open interest at the still stays, right? Because if it escapes, it's the other way around. If it escapes, it can go to 48, right? Or 49. But most of the positioning, you know, is at 50. So we'll just have to see if the 50 holds. For now, it's holding. We'll see. It's a Friday position, so clock is ticking. General Motors, and then let's look at the rest of the positions. So we talked about Citigroup. I'm bullish on Citigroup. Put in order to close Citigroup. Put in order to close General Electric. March order, debit spreads expressing bullish bias with limited upside, limited downside, right? Where you know, I'm looking for, I don't know, 20, 30, 40% return on the risk I'm taking. Talked about General Motors. Netflix, OKE. So Netflix had strong earnings, consolidating or digesting the earnings, considered to be a strong price pattern. I think it's going higher, and it looks like for a few days it's not making new lows even after. OKE and SRE kind of, this is more of a, you know, deep seek, I guess, story that you don't need NVIDIA semiconductors, you don't need, you know, Microsoft data centers, and you might need less energy, right, or guess. Okay, so for now, it's not making new lows. Earnings are in February. I mean, I did trim the position. If it's not making new lows, I'm actually considering maybe this reaction is over exaggerated. AI is not going anywhere. We still need data centers. And after these steep pullbacks, I think maybe it makes sense to add some kind of wait a few days. If it doesn't, if the digestion period is over, then maybe buy again, because I trimmed both positions, SRE and OKE. What else? We talked about PNC, we talked about SRE. On Tesla, I have a put spread, right? Tesla, estimated move could be significant, so Tesla is, I'm hedging. All right, so let's do some earnings. Let's figure out what we want to do. Okay, so we have few of them, right? We have Meta. Right, so Meta is after close today. Microsoft is after close today. And then Tesla. After close today. Okay. And then what is Apple? Is it tomorrow morning? Okay, Apple is after the close tomorrow. Yeah, Apple is after the close. Intel and Visa, that's all after the close. MasterCard, Caterpillar, tomorrow, VX, EPS, Cigna. Okay. So these are the big. So which one is the cheapest? No. Well, I guess Tesla, right? And I already have a position in Tesla. Well, I can definitely sell call spreads at Tesla. So let's look at the position. So let's look at position quotes Tesla. And what happened in the past for earnings. So January 29, after the close, expectation that it will move around 10%, 10 to 12%. Average move is 14%. So a little bit less than people anticipate. All right, so Tesla gamma exposure. Let's see, is there any big positioning? So 350. So you do have. So you do have relatively large position at 350. So 350 strike is on the downside. That's what I would select. On the upside, I mean 420, right? 420, one standard deviation. So again, if you think it's going to be less than 12% move, then you sell volatility, right? But if you think it's going to be more because everybody's nervous and there'll be AI digestion, well, then, then you have to be long volatility, right? So I'm inclined to sell 350. I mean, I do have a put spread. What do I have? Put spread. So I'm hedged 350, 340. So let's see below that level. Do I have any positioning? Let's look at the premium on these guys. Okay, so trade option Tesla. So Tesla 350 strike. Okay, so we already have 350, 340. So okay, so how about below that? 335. So 335 to 330. About 40 cents. So I'm risking $5 to make 40 cents. So that's one. Okay, so let's execute that trade. Let's see, do I have it? Earnings power trade. I have an earnings power. Apple, I have Microsoft. I do have Tesla. I do have Tesla. All right, so let's do Tesla trade option. Should I do Microsoft? Let's see. Microsoft, I think, is a little bit less volatile. I'll do Microsoft too. Okay, so Tesla, let's wait. Let's do Microsoft. I'll do my personal account Tesla. So I'm selling the put spread in Tesla. 43.35 collected 50 cents. So 343.35. $333.45 outside of the strike price. I was able to collect 40 cents, right? So $5 with, so I'm risking $5 to make 40 cents. I'll do the same thing on calls. So I'm getting basically $1 and risking $4. That's my risk versus reward. On the upside, I think I'm going to do it. I'm always biased with Tesla. I think great company, but you know they definitely have challenges, especially when it comes to China. So I mean, Starbucks did okay today. So their China exposure doesn't seem to be too concerning for them. All right, so I'm going to do calls, and I'm going to buy February 7 and sell January 31. And the strikes I'm going to try to pick is 425, right? A 10% move. It's 33, 440. Let's see, 450 maybe. Let's see. So let's see, where's the biggest? So 450 actually. There's a lot of position at 450. All right, so if I'm gonna do 450 strike, let's see, what does that cost? So counter spread, you have to be right. That's pretty expensive, 450. 10%. So a lot of people are a lot more bullish than 450. 10% move. Let's do 460. That doesn't matter. Trade the same. So you have to pick the right strike. What did I pick? 455. That's Tesla. Let's do 455. 455 to 30. So you could do calendar spread. You could 455 strike and sell 455 that expires this week, with the idea that it will gravitate over 50 and stay there. So the 450 will expire, right? Because profit and loss for calendar spread looks like this, right? It looks like this, right? It has to be within the strikes. So if they do have a good news, we want them to be closer to the 450 strike. So that's Tesla. Any questions on Tesla? All right, so now we said we're gonna want to do Microsoft, right? So I think Microsoft is less volatile than Tesla during earnings. So average move is 3%, right? It hasn't been moving a lot lately. Expectation is around 4%. And let's see where the positioning is. So the largest is 470. Looks like a lot of people are interested in 470, 480 strike. So 470, 480 strike. 470, 480 strike. Okay. And then on the downside is 420. Microsoft. All right, so trade Microsoft. Vertical, we'll do $5 spread. Okay, so on the downside, so if we're going to go to 470, $30 down, is it 420, 410? Let's see how much premium can you get for these guys. Okay, so 420, 425, you can get $1. So 420, 425, that's one standard deviation is $1. 417.5, 422.5, about 75 cents. So the idea that it's gonna not break one standard deviation move. Right, so that's Microsoft. You can find it under earnings here, or you can find it here. So Microsoft, right? So I'm buying 422.5 call and selling 422 and buying 417. I mean, you can do iron condor, you can sell call spreads, or if you think it's going to actually make that one standard deviation move, and maybe this fear is overblown and Microsoft is going to hit a home run, then maybe it can. People are thinking, right, 470, 480 level. So let's see how much is the calendar spread. So calendar spreads, let's see, 470 strike, 480. 470, 480. 470 is an all-time high, right? 470. That's $1. 470. Which one? February, 7, January, 470. Okay. All-time high. Okay, and the debit is $0.07. So if they do hit a home run, and the fear of DeepSeek is over exaggerated, right? And we can gravitate toward the all-time high, which is 470, right? Then the profit and loss looks like this, right? As long as it trades in that 475, 485 range, right? Then kind of what we did with United Airlines, right? Then this would be a profitable trade. Plus, I'm financing it with the credit spread, right? To open February and selling to open January 31st, right? So buying further out, sell in front, and with the idea that this trade will be pinned to the strike, right? On really good news or on really bad news, it's not going to break to the 422. So overall, this trade has cost me, 30 cents, right? But, on here, I cannot lose more than $1.07. Here, I can lose basically, $4.25 if it gets to that level. So that would be the Microsoft trade. Any questions on Microsoft trade? Let's send a message. So if you sign up with the SMS message, you get an SMS message. On Yellow Tunnel, I actually send these emails because people keep asking me to do that. So I'm going to do that. So let me send the alert. If you are signed up for Earnings Power Trader, you'll get this alert. Let me just do this. All right, so we're doing earnings, we're doing Microsoft. I'm going to say open, long, Microsoft using spreads. So I'm going to say open United Airlines calendar call spread and credit put spread. Okay. Buy to open. Sorry, this is Microsoft. Microsoft. What we did? 422.5, 422.5 put. And this is January 31, right? January 31. And sell to open Microsoft 417.5 put, also January 31. Market on close, current price is 75 cents. And then open calendar call spread. We'll do buy to open. So we bought to open 470. Calls buy to open. 470 call that expires on February 7th, right? February 7th. Calendar spread. Microsoft call spread. Say buy to open, 470 call expires on February 7th. Sell to open, same strike 470 call expires on January 31. Right, 470, both 470. And the current price of this transaction is $1.07, $1.07. Okay. So you should have got a text message. I got a text message. Yep. Let me know if you guys have any questions on this. All right, so that just went out. Okay, perfect. That just went out. Okay, earnings power trader. You got a text message signed, and then let me do it in my account. Trade option. 422. So 740. Microsoft calendar spread. Buy. So call expiration. So buy in February, sell in January. What do you say? 470 strike. $1. So buy in February, sell in January, 470. Okay. Okay, that works. Okay, so we talked about Microsoft, we talked about Tesla. What's the $674 stock? Wow. How does the Meta look? Meta looks good. Average move 10%, could be as high as 20%. So we've seen it being very volatile. They've been at the forefront of this revolution, AI revolution, Meta. In terms of efficiency of their algorithm and how much people are glued to their computers, right? Because of Instagram and Meta. So you do have a large position around in 750. You also have 720. 750, 720. Okay, let's look at the downside. So downside, it looks like 600. There's a lot of positioning at 600 level. Let's see what's the spread is worth. Okay, 5 minutes. Meta. So if I want to sell a spread, just regular spread. Buy to open, sell to open. Let's see, let's do to expiration months, and let's see 595. 595. Still a lot of premium. Okay, so right below 50-day moving average. Okay, so this makes sense. People are hedging this level, so I want to go right below that 595 maybe. 590, 590, then 585. What can I get for $5 spread? Not much. Okay, 595. Okay, 42 cents. See what's the 42 cents. Okay, so 595, 590, right below that strike. Credit put spread. Right below 50-day moving average, and this is a breakout level, right? So you have to watch this level tomorrow. This is one standard deviation. This is where people are hedging. Okay. Okay, and then trade option. Ooh, 2 minutes left. Meta. Okay, let's do calendar. Spread. Buy to open. Call. C1. Expiration. Buy to open February 7th. Sell to open. Let's see, what's the strike? 725, 750. 725. I did. So basically targeting 740 call. That it's going to, not break the 750 this week, but then by the end of next week gets to 750. So that's the matter. And then I'm selling the credit put spread on Meta. 595, 590. Starbucks and a good option to buy Starbucks, right? Okay. But nice breakout on SE. Let's see SE. Thank you for sharing. SE is breaking out. Internet Rio. C Limited, China. Check IB approach. I did 3. IBM is also volatile. It's also an AI play, but you're right. IBM is another option. Nike at 80. They have exposure to China. I mean, it does look. I mean, it looks like double bottom. I mean, risk reward makes sense, right? You have clearly defined support, and if they can start getting their act together, maybe they can rebound. PayPal has been a signal in some on Tuesday, so we'll see if they can deliver on earnings. Earnings, please expect great earnings. TSCO. It's not very liquid. That's the problem with option data, because when you don't have options data, 7 million is not too bad. Not too bad. Okay. TSCO is when? Friday, Thursday after the close. TSCO. I mean, it would be the same approach, right? Same go. So January 30 before market open. Sorry, that's tomorrow before market open. I mean, expected move is 4%. Expected move is 4%. In terms of positioning, I mean, this is not as strong positioning as the Magnificent 7, obviously. Less people trade it. I mean, you do have strike 60. So what? Expectation is about 3%. Upper price $60, lower price 55. Okay, that makes sense. So good news, it would be to 55. That's how I would position. So if you're bullish, maybe 60-65 spread, right? Bullish spread. On the downside, maybe sell or put spread. Kind of the same idea. Or calendar spread. All right, guys. Thank you very much. Have a great day. Let's keep an eye on earnings. Thank you.